Ladies and gentlemen, welcome to another edition of In the Pit with your host, Lobo Tigre. Our victim of the day, or should I say victims of the day, are Peter Gianulis. He's the CEO of Allegiant Gold, and Alan Roberts. He's the Vice President for Exploration, and I'm told Chief Bottle Washer as well. Now, this is a story that's familiar to my audience from some time, followed it all the way back in the Casey days before it was Allegiant, and I've been to some of the properties more than once, early on with Andy Wallace, legendary Andy Wallace of Nevada Exploration Flames. So I have some familiarity with the story. I think the audience does too. But Peter, why don't you go ahead and give us the quick overview of what you're doing, and then I've got some questions.
Yeah, well, thank you. And I'm joined by Alan Roberts, our VP of Exploration, who joined us about a year and a half ago. Allegiant started many years ago, over 12 years, 15 years ago, under the name Columbus Gold. In 2010, Columbus Gold acquired another project called Montendor in French Guiana. The company attempted to manage both the Nevada properties and the French Guiana properties for about 6 or 7 years in the depths of a very difficult market. Later, the board decided to split up the companies, one becoming Aurea Mining and one becoming Allegiant Gold. Andy Wallace was the first CEO from 2017 to about 2019, roughly. And then I took over CEO in September 16th, 2019. Our philosophy is very, very simple. It is, strongly believe that juniors can only do really one thing really well. Most can't even do that. But, our focus is just one project, which is Eastside. Now, we were blessed by a series of other projects that we had, 11 additional ones when I took over. And over the past 4 years, we have rationalized those projects down to about 5, some of them by dropping and then some of them by farming it out. The model of farming out of the non-core projects has been extremely beneficial to us as we've been able to funnel all of that money of which we receive in farm outs, whether that's cash or shares of companies, into the ground. I'm be hard pressed to find any other junior that spends more money in the ground per money they've raised than us. Over 80 to 90% of the money that we've raised has gone into the ground. So it's been very, very beneficial to us. It's been beneficial to our shareholders, and myself being the largest shareholder, beneficial in that we haven't had to dilute individuals. We also have the lowest dilution formula ratio of any of our peers within the Western United States over the past 4 years. I don't think there's any other company that's diluted less than we have. And then finally, I'll add Kinross is a partner, has bought about 10% stake of Allegiant 2 years ago. And, we have a very good relationship with them. It's our decision what we'd like to do, but they've been very supportive and they provide guidance. We just had a call with them 2 hours ago. So that's the quick and dirty. I'm sure we can get into far more detail if you'd like.
Sure. Well, let's go right to Eastside. I'm glad to hear that you're focusing on that. It's been sort of a long and painful story, and I understand that Alan has his new structural interpretation, and maybe we're figuring out what controls some of the higher grade zones within it. But you just look at the sections, which it's great that you provide these on your website. You can see, you walk right through the sections, but it's, doesn't start at surface. It's mostly at depth. It looks very intermittent. That there's something there. There's something there big enough to matter. I'll give you that. But at that depth and the average grades reported, I'm not sure it's mineable. I don't see a block cave scenario and a giant pit where you strip all that off. Well, it'd have to be pretty rich to pay for it. So without getting too lost in the weeds, maybe Alan, you can go ahead and explain the thesis there. Like, how does this hold together at that depth? How is this mineable, or how might it be?
I'll let Alan talk about that. I'll just interject really quickly that we view Eastside, the Eastside district, which is about 80 square kilometers, 22,000 claims, or 1,200 claims, 22,000 acres, as 2 distinct areas. One in the north, which is what historically has been called Eastside, which we have renamed the McIntosh Zone, which is, I believe, what you're referring to. And then on the south, there's the Castle Zone, the Castle Project, which is part of the Eastside District. So we call Eastside District the whole thing, but now we've called the North Zone, which is where the bulk of the resources are, 1.1 million and about 9 million ounces of silver. And that's what you're referring to. And then on the south, another 350,000 ounces of gold at surface with a completely different systems. But Alan, I'll turn it over to you because you spend all your day on this.
Yeah, and I would absolutely agree that the East Side project, as we call Macintosh Zone and associated, I would agree the economics of the deposit at 150 to 200 meters below surface just would not work for an open pit mine. There's far too much overburden. There's far too much overlying rock to strip. And at the grades that are currently published within the inferred resource of about, half a gram, yeah, it's not going to be a block cave model. So the way we're approaching it is to go back to the science, to go back to the pure geology, and take a good. And I took the deposit apart, and I said, what do we have? What are the component parts of this deposit? And then when I joined the company, the Allegiant was in the middle of a core drilling program at East Side, and that was valuable because it gave me the opportunity to look at the core as it was coming out of the ground and assess what I could see. And what I could see, and your assessment is correct, is a lot of overlying rock which is unmineralized. And I immediately took the viewpoint, okay, in order to make this work, we've got to understand it. So I took the project apart, I took the geology apart. We remodeled it in Leapfrog. I had an expert structural geologist come in and work out what the tectonic setting was on a regional scale and a local scale. Then we broke it right down to the hand specimen scale, and we said, this is what we see. And what we're doing now is we've designed a drill program to test our hypothesis that the East Side is a 750 meter long, 500 meter wide block of rock, faulted on all its boundaries, but contains a sheeted epithermal vein system with a boiling zone at about 150 to 200 meters below surface. And the drilling that we're embarking upon fairly soon will test that hypothesis. And if we are correct, and as some of the previous drilling from historic perspective shows, there is high grade potential. And the key to East Side is to not change the overall tonnage, but to increase the grade. And we increase the grade by identifying whether the East Side has the ability to host or does host high grade structures. And if we encounter these high grade structures, we add tons of high grade material, which raises the overall grade. And if we can do that, we may be able to bring it to that 2.5 gram block cave scenario, which we can attempt underground.
Yeah, I mean, I'll add some of the best drilled intercepts that not only ourselves, but within Nevada for an oxide deposit were drilled by us back in 2021, reaching deeper depths of anywhere between 220 and 370, 420 meters. And you were looking at almost material of an ounce to 2 ounce, or so call it 30 to 60, 70 grams a ton type of intercepts we were hitting down below. So our drill program that Alan has designed is to test those high grade zones. It was, primarily one of the reasons why Kinross came in as well, is because the high grade.
So for that to work, I mean, you can't drill the whole thing. I mean, it would be very expensive. You have to have a theory for the orientation of where you think the higher grade is going to go, and then test that. And the drilling that you have, that core drilling from last year and or the most recent drilling, you have confidence that you have that figured out? Or is this sort of we'll test it with the first few holes, get some confirmation, and then go in and drill out the rest?
No, we have the structural interpretation, and we have measurements taken from within the Macintosh zone from surface, where we've identified, I think you were there during the visit, where you could see the veins on the surface. And we've designed a program to test the hypothesis that the principal controlling structural orientation is north 15 east, dipping at about 80 degrees to the west. And that's what we're going to do with the upcoming drill program later this year.
All right, so that's good. We get our expectations in hand here. The expectation here isn't drill it off. The expectation here is prove the hypothesis or disprove.
Exactly. Yes, exactly that. Yes.
Okay. All right. And I was there last July. Why is this taking so long to put together?
Well, I think there's a few things. One is that we wanted to ensure that we had the funding in place. And for us to get the funding, we needed to be confident that one of our projects, which were being farmed out to one of the other juniors, that they were going to execute the first and second option to acquire the property. And that was roughly $6 million in payments to us. So with that in hand, we felt comfortable to employ a drill program without having to tap the capital markets or the financial markets. So until that happened, which occurred in November, it was very difficult to make any decision what we wanted to do until we were confident we had the money.
Without further dilution. That's good. All right. That's a fair answer. I'll accept that. And I want to talk more about the box.
It's not fair. It's the truth.
Okay.
Additionally to that, adding to that, that was the period through the end of the third and fourth quarters of last year. But there are environmental restrictions for us we can't drill in the first 4 months of 2024, which restricts us to starting on the East Side program until April 15th.
Well, I mean, there are other issues. So one of there's an eagle's nest that has been abandoned for 5 years that doesn't allow us to drill within a 1 mile radius, which encompasses the part of the McIntosh zone, which is the high grade zone that we've discovered. So we'll be able to drill after April 15th in the next 2 months. The third reason, as we're going through all the reasons, the first was funding, the second is that, and the third that we hired a structural engineer and wanted to complete the geological model on Leapfrog. And that's, one of the big things that Alan did. I think one of the great things was put this all into a scientific approach. And now we have a very strong, or at least our belief of strong geological interpretation, which has led to the 3 hypotheses that we're going to be testing this year. The first we're talking about right now, we have 2 other ones.
We'll come back to that, but just since we've touched on the money, as I recall, other parties that shall remain nameless also had a large whack of Allegiant shares that might have been liquidated. Has that been cleaned up?
Oh, I wouldn't know which one that would be. I'm sorry.
I guess we won't go there, but I understood that there was from vending out or buying.
No, it would be the opposite. We have the shares of companies. We've never given anyone any shares.
Okay.
Like we've never, well, that may or not necessarily be exactly the issue, but there's no big shareholders that we're liquidating that I'm aware of. The big shareholders are myself, the other board members and directors, Kinross, IAMGOLD, and I don't believe in Ingalls and Snyder, and those are right there's 40% of the shares.
Okay, skin in the game. Well, we'll come back to that too. Okay, so I did notice the most recent press release about 3 targets. And I remember that was the other thing we talked about last summer, that we had these exciting theories for targets number 2 and 3. Why don't we go through those? And, my other question is, what have we been waiting for? But that's been answered. So,
Okay.
Alan, can you update us on these other targets, please?
Well, as we started up in the north at the McIntosh zone, formerly East Side, to just south of that, there's an area which is adjacent to the McIntosh zone, which had never been drilled, which we refer to as the South Hill, which is an outcrop of silicified rhyolite that hosts some anomalous gold at surface. And the next target to be tested will be that rhyolite dome in contact with the andesite, which at McIntosh hosts some mineral, but this extremely altered rhyolite has the potential to host significant mineralization. And so what we plan to do is test that at around the same depth below surface, or same elevation level as what we identify as the boiling zone potentially at the McIntosh zone. So we're going to be putting a couple of holes into the South Hill to test that hypothesis. And if that is the case, if we do encounter potentially economic mineralization, then that is another feature which will add tons, it'll add grade, and it gives us the ability to access at a lower elevation from the bottom of the front range into the mountain. We could put in a portal, we could go underground, and we're going straight into ore. So we're from a decline into potential ore, and then we follow that through underground into the McIntosh zone, which has...
You said that McIntosh was faulted off on all sides. So do you know the offset of the fault in that direction? Like this new target is going to be higher, lower, left, right? Do you know? Is that in your model?
That's part of what we'll find out when we drill it. You know, it's not been drilled to any degree, and this is the first of the depth, the real test of the depth of this particular target. And when we drill it, we'll be using oriented core, and we'll identify the orientation of the structures, and we'll see what mineralogical textures we encounter, identify how we think, what elevation within the epithermal system we think we're at, and then, you know, adjust our targeting accordingly for future holes.
All right. Well, actually, that makes me think of something else before we move on, because the targets are similar. If we're looking at epithermal, have you, from just looking at it or from thin sections, do you have an idea for how many events there are there at McIntosh? And are you limited to the typical 200-300 meters of boiling, or are there multiple events here that could give this more depth? Well, is McIntosh open at depth, or is it pretty much known that it's going to be limited to, you know, one boiling?
There's in 2 holes were drilled with RC 239 and 243. And both of them encountered several levels of high-grade mineralization. In fact, 243 encountered initial high-grade mineralization at about between 170 and 225 meters. And then at the bottom of the hole, 375, was another zone of high grade. And we don't interpret those as being the same in a classic epithermal system. Now, it is possible that we have an extended system, which is fault extended. But at this point, without the core, we can't tell. But that's one of the goals of core drilling, is to identify where we think there are potentially separate levels, because we know that the Monte Cristo range, as it was forming, was moving. So it was being faulted while mineralization was forming. So we could have a mineralizing event associated with faulting, and then an uplift or a down drop. And then, so that mineralizing event is now lower than the current mineralizing event, which is now above it or below it, depending upon what the throw of the faults was. So this is all part of the same ongoing hypothesis. Test for high grade to increase the grade of the overall, test where the zones are. Are they indeed sheeted epithermal veins, or is it a fault repetitive system, or is it one system of veins that exists between 2 larger faults? This is the goal of the core drilling, is to identify all of these things. And this applies.
So sorry, are there a couple of deep core holes in this round of drilling coming up, or is that for a phase 2 later on?
Potentially, we'll have to see how the drilling goes. But we have 3 holes planned at east side to go down to in excess of 400 meters. So this will be right down through all those zones at shallow angles, so that we can measure all the steep structures and low angle structures across what we interpret to be the structural fabric.
I see Peter chewing on his pen when you say that. You do have the money in the bank, right?
I mean, we have the money. It's it's how much drilling we want to do, and then I'm a little bit more conservative, so I don't want to have to go to the capital markets this year or next year if I can help it. And then one of the great things about what we've done, and there's some great things that I don't think we've done very well. One of them is promoting, but what I think we've done very well is managing the balance sheet and managing the share structure without having, to open up our investors to some disastrous financings. We have no
warrant. We like the prospect generator model back in the day.
Yeah, and we are
more on that in a moment. Alan, why don't you tell us about the third target then?
Well, the third target is, I think, which you visited last July, was Castle. And that's most people know or visited know the old Boss mine. And so we have 2 what we interpret to be 2 parallel structures. One makes up Bossberg and the other makes up the Castle Blackrock. And currently we have a low grade inferred resource, mostly drilled using subvertical RC holes. So what I've done is plan a series of core holes to go in and test to see what the geology really is, because if these are epithermal steeply dipping structures, then the likelihood that we intersected those with vertical vertical RC holes is fairly low, or even steep angle RC holes, because you're really narrowing the area that you can hit with it. So what we're going to do this time is we're going to target with shallow east dipping 45-degree core holes. We're going to go across all the structures and identify what is our principal, what is controlling gold distribution. We have a large low-grade gold envelope as defined by the inferred resource, but we don't have a control on gold distribution. It was never identified during the previous RC drilling, and we want to identify that with the core drilling so we can state, and that will allow us to take our low-grade inferred resource. If we can model gold distribution, we can create measured and indicated resource, and that puts us into that economic category, which is so important. And the reason that we're doing this targeting at Castle is Castle mineralization starts at 5 meters below surface, which gives us, it bottoms out at about 125 to 150 meters. We have mineralization at 200 meters, but it's probably sub-economic. But down to that 125 meter range from surface, we have potentially great strip ratio, low strip ratio, 1-to-1 probably, maybe a little less. And we have mineralization occurring at surface, near surface, which gives us almost zero strip to start mining. So for me, it presents a much more attractive startup target for Allegiant to get us into that mining environment. And then we can use, we can continue to develop the McIntosh South Hill story with time, because that's going to be more complex.
Yeah, and I would say that there's three hypotheses, but there's also really four. 3B would be the heap leach and the dumps. Maybe Alan, you can talk a little bit about that, at least what our plan is for that in the next few months.
Well, what Peter is alluding to is there's an old leach pad, which I think you saw when you were there, and there are waste dumps. There's a 5-acre leach pad, and there's about 11 acres of waste dumps. And we did some sampling, and we put out a news release end of last year that we had some really quite remarkable results. We had up to 8 grams per ton from samples off the leach pad, and we had 22 grams per ton off of the dumps. So this made us realize that, the mining done in the 80s, the leach pad was really a smash and grab operation, and the leach pad material it's not quite run of mine, but it certainly looks like it was just a first stage crush, and there's some relatively large material with some high grade on it. What's interesting is both the leach pad and the dump material contains rock that we haven't seen, results we haven't seen in the drilling. So, okay, it was mined here, why don't we see it in the drilling? Well, we're back to this. We drilled a lot of steep subvertical RC holes, but we didn't really cross the structures. And if those structures contain high grade, what we've seen mostly today, it's just a low grade envelope. Again, same with East, the same as the story at McIntosh and South Hill. Well, McIntosh mainly, but at Castle, if we can raise the grade from 0.5, we can raise the grade to 0.6, 0.7, 0.8, maybe even 1 gram, then that really changes the economics of the Castle deposit. Because if we get, if we can get 50, 60 million tons of a gram, then we're in that's an optimum scenario. And so that's the drill testing at Castle is, okay, do we have these structures? Do they exist? Are we missing these in the historic drilling? And I think the answer to that is yes. And so we're going to test it.
That was a forward-looking statement of the first order, but it's okay. It's all right. We have to have goals. But Peter, this all makes sense. And actually, not to take away from Alan's good hard work, but it also seems kind of obvious. Like, Allegiant has been poking at these things for years. Why did it take Alan to come along and say, well, here's our new targets? Help me out here. And maybe it's water under the bridge now. You've got the targets, you're testing them. But this is not a new company, and we're basically testing these new hypotheses now. Help me out here.
I think I can answer the question without stepping on too many shoes. I think that the approach is a little bit different. I think prior to Alan joining, it was an exploration company looking for targets, looking to add ounces. And Eastside, this is just not Alan and my belief, this is Kinross's belief as well, and I've said this many times, that they believe there's going to be multiple deposits within Eastside besides Castle and the McIntosh zone. So how many targets do you want to drill? And is that what we should be doing? I'm not arguing that that's the right or wrong approach. I'm answering your question. What's the difference? The difference is that Alan comes from a background of putting projects into production, right? So Alan's approach, and Alan, you can correct me because I'm kind of speaking to you as a third person here, but your approach is more like, I'm more focused on putting a project into a mining decision, or at least getting to a mining decision. So we have potentially three projects with 3 deposits within Eastside known. And the goal is, how do we get to cash flow or production decision or mining decision? And I think that that's the main difference between, 10 years ago and the last 4 years since I've been CEO, in particular since Alan joined a year and a half, is, okay, what's the best path to get to cash flow? My entire goal when I took over the CEO is I did not want to be beholden to the capital markets, particularly the Canadian capital markets. And so I spent the first year and a half, 2 years farming out our non-core projects in order to put us in this position today where we haven't had to raise money in 2 years. We probably don't have to raise money for the next 1 to 2 years. We don't have any warrants outstanding. We have a very clean capital structure. And so we achieved what we said we were going to achieve. Now, looking forward-looking statements is that we are looking at how do we get to a decision, right? And the beauty of the dumps, and a lot of people kind of, I don't think understand the importance of the dumps and the heap leach reprocessing operation. It's not that we're going to pull out 100,000 ounces of gold. I mean, we estimate, really rough, please use all the, take this as just a rough number, but we're looking in the 10,000 recoverable ounce range, right? And that 10,000 is not going to make a company, but it gives you an important cash flow to be able to develop the castle, which then will produce cash to be able to develop the McIntosh zone. So we're looking at it as a staged project. Eastside's big. And so today, the current thinking is heap leach reprocessing, dumps reprocessing, then castle, get that to the mining decision, then the McIntosh zone. Alan, I don't know if you want to add anything to that.
Well, actually, let me jump in. I understand that. I understand the logic of that. And even though I'm not a big fan of small mines, there have been some. Well, I mean, take Gogold, for example, with the Parral tailings operation. That was never going to be a world-class. I mean, it was what it was. But boy, they turned that cash flow into an exploration budget and have done well with it. And there have been examples like that. So I get that. But surely if you're successful on any one of these 3 targets,
right,
you're not going to build the mine. You're going to get, I mean, if you discover at surface close to a gram or closer to a gram, 1 million or 2 ounces at Castle, you're not going to build that mine. That's just too juicy. Somebody's going to take you over. So do we really need to look at a bootstrap strategy?
No, but I think you need to have a business plan. I think one of the differences between ourselves and other juniors that I've been involved in is that I think we look at this as a business. I mean, we look at this, we get criticized all the time that we don't promote, that we operate this as almost as a private equity company or a private company. I actually take that as a compliment because we do look after every penny. We're very prudent in how we spend money, but we have a strategy. Now, if that strategy gets interrupted because someone wants to take us over, and we're always at the center of every single M&A discussion in Nevada, right? But we just feel that at today's valuation, we prefer to do it ourselves until we feel that there's a value that we can be able to monetize. And if you don't have a strategy or a plan on what you plan on doing, it's futile. Then you're just throwing darts in the air. We have a strategy. We're trying to get to a mining decision. And if we're able to do that, then, someone will come and take us out. That's great. But what I think a lot of people don't even give us any credit for, which I think is the most valuable part of what we do, is permitting. Like we'll have by the end of this year, 7,000 acres of permitted land, right? 1/3 of the project.
Permitted for
drilling. So I'm sorry, yeah, so plan of operations, right? And those take time. It costs a lot of money. We've spent over $1 million over the last 4 or 5 years making sure that we could drill thousands of holes at Eastside in 2 different zones. The McIntosh and the Castle area will be fully permitted for drilling, right? As many holes as really essentially you want, and within reason, right? And so, this project has been Eastside has been developed by us thinking way into the future, right? So if someone wants to take us out, they're not going to spend 2 to 3 years permitting. We've done that for them. We've done the bulk of that, including a lot of the baseline studies.
Well, and to be fair, everybody says, oh yeah, we're going to get taken over. But you can't just, or sorry, no, they say everybody says, oh, we'll build it if we have to, but we'll get taken over, right? But it's one thing to say it, and it's another thing to walk the talk. So I'm with you on that.
We're not saying we're going to build it. We may. We're saying we're
playing devil's
a
advocate.
mining decision.
But playing devil's advocate, as you point
That's my
out,
job.
What if somebody doesn't come and take us out? What do? We can't sit and do nothing. We have to have a plan to continue the development. And if, as we've seen in the markets in the last 2 years, money is, you need a big project, and you want to be spending $500 million to get a lot of funds or others interested in your project. And if we don't develop it to that stage, then we're going to get taken out by somebody who's going to undervalue the project. So my goal is to keep adding value to that project by adding ounces, by adding grade, and by adding understanding. I mean, that's the critical part. Adding understanding of our deposit.
Imagine that.
Do we understand every facet of this deposit yet? No, we don't. Why don't we? This is what we have to do that, and that's my goal.
All right, Peter, do you have any other projects in the portfolio still looking for joint venture options, and other without just breaking any confidentiality agreements you're in? Can you tell us, is there a probability or a corporate goal for more cash from more farm outs coming up this year?
Yes. Well, for this year, I don't know. It's going to be dependent on the market, but our two, I think, most prospective projects are Goldfield West, which is right next, almost adjacent to Centerra's Gemfield project, which is being built, the mine. And we're talking maybe a few kilometers away in the town of Goldfield. And then we have Browns Canyon, which is very close to Archimedes and Ruby Hill in the Battle Mountain Trend. We have done no work there. We're expected to do some work at Goldfield West. Actually, last year was our busiest year at Goldfield West. Funding dependent and market dependent. We would drill holes this year at Goldfield West. We'll do our initial program. And then it goes down to, so those are the first three: Eastside, Goldfield West, and Browns Canyon. And then the fourth is Bolo, which we still have a 50-50 joint venture with Copar. I'm not sure, that's going to see any work. I believe that
that's been another slow moving story.
Correct. But we haven't been the operator there. Not that we would have done anything differently, but I think my biggest issue with Bolo, and it's a great project, but we had permitted it initially. We need to do a plan of operations for Bolo to be able to test new targets. You can't just keep on re-drilling the same targets. So if I'm being critical on that, I don't think Bolo was advanced over the past 2 or 3 years, in my opinion. And then the fifth project is Overland Pass, which is adjacent to Kinross's Bald Mountain. And we have no plans to do any work there. And I'm hopeful one day Kinross calls me and says, well, as we move towards the north, their exploration efforts, within 300-400 meters, there's going to run into another property, which is called Overland Pass. So
shadow of a head frame. It's a good thing. It's good neighbors to have. Ruby Hill is certainly making lots of interesting headlines these days. And the Goldfields things, it's like, how many years have we driven by that speed trap and thought, gosh, there's got to be some gold left here. And lo and behold,
a ticket last time. Alan should be chuckling. He accompanied me to the courthouse to pay for it.
Well, I mean, all right, we don't need to go there. All right, okay, so back to your 3 primary targets this year. What is the exploration budget? You keep saying we should be able to drill these this year without going back to the capital markets, but what's the bare bones minimum that Alan wants to drill, and do you have that in the bank? What are the numbers there?
Yeah, so we have it's between 2,500 and 3,000 meters of core. We anticipate about $1 million to $1.2 million US. We have those funds in terms of cash.
3,000 meters of core for all 3 targets, or not like each? That's
all 3 targets.
Spread across all 3 targets.
Yeah, so 6 holes. Castle's very shallow, so between 170 to 200 meters per hole. 6 holes, that gets you 1,200 meters. 2 holes at South Hill, 400 meters each. That's another 800. And then the Macintosh zone would be between 3 and 4 holes at 400 meters. So that's call that 1,200 meters on that. So 1,200 plus 800 is 2,000 plus another 1,200 at Castle's 3,200 meters. And that's how we get to the three.
So these are definitely proof of concept programs then. And obviously, ideally, if you hit on any one of them, then stock goes up and you raise money to go more energetically ahead. Is that the plan?
Yeah, I mean, right now in our balance sheet between cash, marketable securities, and some other things, we're at about 4 to 5 million. And but I also don't want to put us in a position where we're having great results and then we're out of money, right? Because it kind of stymies the upside on the stock if everyone thinks you need to raise money. And so we've been pretty prudent in how we spend money.
Kind of course it does. Nobody's going to buy if they know that there's a financing coming.
Yeah, I mean, correct. I mean, you're being more direct. That's correct. And I don't want to put us in the position, and Alan knows, and we speak about this almost every single day, is that it's great to finish this program and still have 2.5 million in our balance sheet, right? And that's what we're trying to do. We don't spend a lot of money on other things, but tends to go into the ground. We know that Kinross is always there, have been very supportive of us if we wanted to tap other sources of capital. But we've been very, very disciplined in how we spend the money and put ourselves, I think, in a winning position. At some point, the markets have to help. And we've been able to ride this storm the last few years very successfully. And we haven't gotten credit for it, but that's a different issue. That's more of a lack of promotion.
Well, the major indices, gold stock indices are underperforming gold. So it may not be entirely your fault, Peter. We not yet ready to ask for your head on a plate on that one, because the whole sector is getting no love. So it's hard to point at just you, but it's funny. I mean, we're talking during a period since 2020. It's 2024. We're going 3+ years at $1,900 to $2,000 gold, and we're talking about what a difficult time this is for the gold mining industry. Yeah. I mean, what a crazy world we're in.
I think I'm more referring to the fact. I mean, it's obviously an opinion of mine that we've done a pretty good job of putting ourselves in a position where we don't depend on capital markets. We've done more drilling over the last 4 years than any junior in Nevada, maybe with the exception of Corvus, which was all in 2020 anyhow. But if that rolls off, and you said since 2021, I don't know any other company that's drilled more than us in Nevada. Liberty Gold in Utah.
BlackRock has put quite a few holes there in Tonopah.
Yeah, BlackRock has done quite a bit as well, right? So, but I think I got to think about, they've drilled very deep holes at their project. So 600, 700, 800 meter type of holes. I'm not sure the total meters. We've drilled quite a significant amount of holes and meters.
Yes. Okay. So, all right, I got it. So, the last on the money question, of course, is the skin in the game question. And you've already alluded to this, but if you want me to put my hard-earned money into this, I got to ask how much of your own, and no free options given to you as president and CEO, but like cash of your own. How much have you put in this game, Peter?
Well, I'll just answer your question directly. So 2 million of my money. The other directors are probably put in another 1 million at least. And I think the best way to characterize this is when our group came together in September 16th, 2019. Myself, Sean McGrath, Sean Nichols, Gordon Bogdan, the group combined probably had 0 shares in Allegiant or close to it. So over 90% of our shares that we have today have been bought in the open market. Okay, open market. And then I would say another 5% or less has come from private placements, and then the other 5% have come from options and RSUs. So we have, we've never gone to a 10% allocation of RSUs and options, even though we have the ability to. I think we only have we've only used about 5% of the RSU option pool of the 10%. And we just have a big position. There's no RSUs that the company's going to grant me that's going to change, that's going to motivate me more. I have 12 million shares, of which 11 I think I've bought in the open market.
Fair enough. Okay, normally I don't have a VPEx to ask such a rude question of, but Alan, did they give you a bunch of shares to come on board, or do you believe in the projects enough that you've put some of your own money in?
I got a limited number of I got a small number of stock options and a smaller number of RSUs, but that wasn't my motivation for joining the project.
I don't think it's small, but go ahead.
I was just going to say, Peter, come on. His small number of options?
That's not true, but he's negotiating for the next one.
All right. Okay. All right. Well, gentlemen, you've been good sports with some of my obnoxious questions here. I understand it. I'll be looking forward to what the truth machine turns up, and I'll let you have the last word. Is there anything else you want to make sure our audience takes away from this?
No, I mean, I think people who've known us for years know that we're straight shooters. We try not to over promote. We try to be very upfront, and if people, please feel free to contact us. That's the best way to get to know management. When I was on the other side, meaning running a fund in the junior mining sector, I would never have invested in a company without first speaking to the CEO or the VP of exploration. So get to know your company, get to know the projects, come on site. It's very easy to get to.
All right. Well, thank you very much, and good luck, and keep us posted.
Thank you very much. Appreciate it.
Thank you.
Bye-bye.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.